Rumours of the death of the Melbourne market have been greatly exaggerated. While media is full of feverish headlines and sound bites about falling demand and collapsing prices, our research proves that it simply isn't so. The Melbourne market is renowned for its resilience in tough times, and our latest quarterly survey has confirmed it, with busy sales activity and solid price outcomes, particularly in the cheaper markets. In the winter 2022 survey, 3 months ago, we identified 194 Melbourne suburbs as either rising or consistency market. And in our new quarterly survey, has found in an almost identical number, 193 suburbs with persistently good sales activity, despite the disruption of rising interest rates, cost of living pressures, and persistently negative media. That so many Melbourne locations have been able to maintain forward momentum despite all the negative forces is testimony to the strength of the city, which incidentally has been named as the nation's #1 growth economy in the July 2022 edition of the State of the States report published by CommSec. Now, as I've observed previously, there are two sectors with particular strength in the Melbourne market: the cheaper outer ring areas and the inner city suburbs dominated by apartments. The common feature of these two standout market sectors is relative affordability. Now, all of the municipalities in the outer ring precincts of Greater Melbourne are dominated by suburbs classified in our research as rising markets. Now, those rising locations include 11 of the 13 City of Melbourne suburbs, 11 of the 12 suburbs in the City of Hume, 8 of the 10 suburbs in the Whittlesea local government area, all of the suburbs in the Wyndham City local government area, and 9 of the 15 suburbs in the City of Casey. In the case of Melton, Hume, Wyndham and Whittlesea local government areas, these results represent a slight improvement on the results of the previous survey 3 months ago, at a time when, based on the media headlines, we might have expected a significant decline. In the suburb of Melton South, for example, current sales levels are more than double where they were 18 months ago. And in the suburb of Wyndham Vale, sales levels have tripled in the past 18 months. Now, there are similar outcomes in suburbs throughout the affordable outer ring precincts of Greater Melbourne. These are mostly locations with median house prices between $450,000 and $650,000. And the theme here is clear: buyers in the Melbourne market are chasing affordability. Another manifestation of that theme is the uplift in activity in inner city areas where apartments are the dominant product. In the City of Melbourne, for example, 8 of the 10 suburbs that we analysed have rising momentum, and these include the Melbourne CBD, the suburb of Carlton, North Melbourne, Docklands and Southbank. Quarterly sales in Docklands have doubled in the past 12 months, and there's been a similar major uplift in apartment sales in the Melbourne CBD. With international borders open and overseas migrants and students returning, demand from renters and buyers of apartments has risen, and vacancy rates have dropped markedly. The nearby city of Port Phillip has similar characteristics. 7 of the 9 suburbs analysed there have rising momentum, including St Kilda, St Kilda East, Middle Park and Port Melbourne. With the price gap between houses and apartments now wider than ever before, this is now becoming an emerging trend, not just in Melbourne, but in other major cities of Australia as well. Another local government area with a large market share of units, not too far from central Melbourne, the City of Moreland. It's also showing some level of resilience in the face of negative forces. Of the 12 suburbs in our analysis, 10 are rising markets, which is a significant improvement on the situation for that local government area 3 months ago. Now, many of the middle Melbourne precincts are doing well as also. The City of Monash, for example, is showing strong resistance to downward pressures. Of the 11 suburbs in our analysis, 10 are classified as rising markets, which is a step up from the situation 3 months ago. In the middle Melbourne markets generally, upwardly mobile markets include 7 of the 11 suburbs in the Banyule local government area, 10 of the 11 in the City of Monash, 10 of the 12 in the Moreland local government area, 9 of the 14 in Kingston, 10 of the 16 in Whitehorse, and 6 of the 8 in Maribyrnong. Generally, it's the top end of the Melbourne market that's declined the most in terms of buying activity, although there remain solid growth markets in these precincts as well. One section of the Greater Melbourne area that has contracted noticeably comprises the lifestyle markets on the fringe of the metropolitan area, the Mornington Peninsula and the Yarra Ranges. The Mornington Peninsula has been one of the nation's outstanding growth markets in the past 2 years, and it still has strong price levels. But sales activity has passed its peak, and now only one of the 16 suburbs in our analysis is still classified as a rising market. But beyond those areas, the story of the Melbourne market is about stubborn resistance to the negative forces currently afflicting Australia. Whether it's the cheaper outer ring areas, the popular middle Melbourne suburbs, or the inner city apartment precincts, there's still plenty of life in the Melbourne property market.